Hello guys. After we have seen last lesson that we have major crashes in the stock market, in this lesson or in this video, we try to see the reasons why we have this kind of crashes. Okay, so for me, I'm just giving you my own reasons that I find or I know, but you might, if you search, you can find more reasons than that. Okay, let's go and check them one by one. So what are the reasons of these crashes? So the first reason is the long bull market. Now what does it mean? Okay, it means something very simple. If the stock market is going up for many years, there should be a year where it collapses. Okay, this we call it, when it goes down, we call it correction. Okay, or we call it a sell-off. Sorry for the handwriting. Now, correction, when it is sometimes it is very small. We have small correction, and then the stock market will go up. So it's very small, like a few days or 1 month or two, like what we have seen before in pre-exit event. When we have only 2 days, the stock market goes down, then it goes up. So the people, when they see that the stock market has been going for so long, so they have the idea that there is a crash coming. Okay, that's why right now you see in the news, you see people talking about crashes of the stock market always. This is the beginning of something. Just the idea that the bull market can finish in 1 day and it stops. The second thing is recession. Recession, what we mean by recession is when the companies are not selling that well. It means in most of the sectors there are a lot of companies, they don't sell well, so they don't make that much money, so they begin to fire people. This is the first thing that you can see, and maybe you know about recession, is that companies fire workers. Okay, this is their solution. Okay, normally they should find other solutions to make their business better model. So what they do at first, the first thing they do is just to fire people. This is the easiest thing. So this is one of the reasons. Now the other thing is bad news. Bad news, it means when the government or some sectors or some big companies, they announce bad news, and this bad news goes viral. Okay, it goes viral, and a lot of people, they sell because of this, of the bad news. As you can see, for example, just an example of the earnings. Now when there is a bad thing about the earnings, companies can go down and crash. Now when the people, they begin to sell because of these things, they go to buy physical gold and silver and bonds. This is what the people do when we have problem in the stock market. So that's why a lot of people, what they do, when they begin to hear about crash of the stock market, they begin to take their money from the market. It means there is a selling. This action is selling the stock market or shares in the stock market, and they go and they buy physical gold, silver and bonds. Okay, for example, they sell bonds at 5% or 6%. They say, okay, I will be getting 5%. It's better than I stay in the stock market. If it crashes, I will lose a lot of money. And understand that physical gold and silver, the people, they buy gold, put it in the bank, and they hold it for the future, because gold is more stable and it is physical and it has a lot of advantages. Now there are another thing, number 5, which is rumors. It means just a lot of big guys in the market, like in TV big websites, okay, they begin giving this news and these rumors that the market will crash, and we see a lot of companies crash and they are selling off. It means they begin to give news, okay, and these rumors, okay, some people they believe in it and they begin to sell. So all this, what I'm saying here is there is what we call selling. It means a lot of, because of these reasons, people sell shares and go elsewhere. Okay. Number 6 is behavior of the crowd. It means understand that the public, the big guys, the Wall Street guys, can change the behavior of the crowd from buying to selling, or from selling to buying. Okay. So some people, for example, hedge funds, they go and sell short a company, and they ask the crowd to follow them, okay, to sell, because these companies are not doing very well. So some people, they sell, okay, they just sell their shares because they are scared that this company is not doing well, because some gurus online or some TV stars, they ask them to sell. Now, while the others are selling short, which is different, okay, they are selling short, it means when the shares go down, they will make money. Now, there is another thing which is very important: mutual fund sell off. Okay, what does it mean? It means the mutual fund, they begin to sell a lot, a lot of companies that they think they have problems. But the good thing right now is there are rules. So the mutual fund managers, they can't sell everything they own. That's why the market is stable. Although we have seen, let's say, what we call the crash of 2008, for example, okay, 2008. But you know, mutual fund, they can't sell everything. That's why the market has lost 50%, but still they can't sell everything. If they sell everything, the market will have a crash like the 1929, when there is no rules. At that time, there is no rules here. Mutual fund, they can sell whatever they have. No one will stop them. But right now, there are rules that stop these guys from selling everything. Because if they sell everything, the market will crash. Number 8, short sellers like hedge funds and millions of traders. Understand that these guys who are day traders, okay, day traders and hedge funds, they short sell stocks. Okay, since these hedge funds, they have billions of dollars, and these millions of traders, they have billions of dollars. So all this, they try to sell short stocks, and they can make crashes for some sectors or some industries. They can make a crash, especially when the sector is facing problems. Like, for example, if you can remember, energy sector many years ago, energy sector collapsed. Okay, now who collapsed this who collapsed, or who make this sector go down? It's the short sellers, hedge funds, millions of traders, and some mutual fund who sell this energy sector. That's why it collapsed. And you can see that a lot of people, they have a lot of losses because of this thing. Now, another thing, companies that went bankrupt. You understand that a lot of companies, when they go bankrupt, understand they get unlisted. It means they don't exist. Unlisted. It means if you have thousands of dollars in a stock, but you don't know the health of this company, so when it is bankrupt, your money is gone, and it will be unlisted. It means it doesn't exist anymore. So all your money is gone forever. And another thing that I told you about is unemployment. It means when there are recession, this has a relation. Number 2 has a relation with number 10. people, when they get unemployed, what they do, if they have savings, or they have stocks, they begin to sell them, okay, to sell these stocks in order to get to pay their bills with them, okay. And this makes the recession, makes some crash to sell, some crashes in the stock market, okay. So all these that I put here, they are my own reasons. There are some secrets that no one knows why, okay. And even they say, oh, we will search the secrets. You know, you can't find why and who are behind these crashes, okay. Because all the people, they lose their money because of these guys, okay. If you can remember, I'm just telling you one thing. If you can remember that in the crash of 1929 and in 1907, this is another crash. There is one guy who is called Jess Livermore. For those who know him, Livermore was one of the biggest winners in these crashes. He made millions of dollars at that time because he short sell all the stocks in 1929 and in 1907. He made millions at that time. They say maybe it's like 100 million in this 1929. So there are a lot of people. He is a day trader and he is a swing trader like us, it means, but he do short selling a lot, okay. That's why they call him what we call the plunge boy, because he's short a lot, and he was one of the best day traders and swing traders in the world, okay. If you see his history of trading, okay. So as I told you, the reasons I give is just some explanation, but the true reasons and secrets you will never know. Stock market is the most conservative business in the world, okay. So you will never know. You will never know even who are these people who sell everything. Why mutual fund, for example, sell everything? Why? Okay. There should be some pressure that makes them sell before the other people sell, because it's like something in the whole market. But short sellers, as I told you, they can't do it alone. There should be big guys like mutual fund managers who are selling, and these guys, they complete the job and they make it go so bad for the stock market. And next video, I will try to explain who can benefit from this crashes, and who are the victims of these crashes. Okay, thank you very much. See you next video.